Tom Lee is back in more bullish than ever on this market, even after all the craziness that we've seen unfold over the last couple of weeks. And coming into this week in particular, this could be one of the most volatile weeks in the market that we have seen this year. We have the April 2nd and 3rd trade deadline. We have non-farm payrolls coming out on Friday. And again, we have FOMC speakers coming out left and right, and the market and investors as a whole are going to be looking towards a lot of these events for more guidance as to what is going to happen next after we get through this crazy week. Tom Lee is coming out again, providing a little bit more of his insights into what he thinks is going to happen next in this market. We're going to be breaking down those statements and providing my own analysis as well. And we also have to cover one of Tom Lee's very, very bullish targets on a specific asset going into the end of 2025. So guys, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do go live. But without further ado, let's roll this first Tom Lee clip and break it down.
Some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, if obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces
buy,
for a
though,
bottom.
into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, 0.5 point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
So in that clip there, in Tom Lee's view on the overall macro situation as it relates to current trading action in the market, he believes that this is a giant overreaction. Now, Tom Lee might end up being correct here, guys, in that inflation doesn't start roaring back to the upside, and we do see those slower growth projections come into play, potentially increasing unemployment, and the Federal Reserve will have to come out in this year and next year and cut rates by a little bit more than what the market is currently expecting. Or with the aggressiveness of these auto tariffs coming out and some more tariffs potentially coming down the pipeline, we might see that inflation number starting to tick back up. If you guys look at the progress of PCE really over the last 12 months, there really hasn't been any downward progress on PCE and a lot of these other inflation metrics there. But what I want you guys to all realize at the end of the day is that there is that uncertainty in markets, and we don't necessarily know for sure what the next outcome is going to be with all of these new policies, and that is what is freaking out the market in the present. And that is perfectly showcased by this chart right here with the US fundamental long-short net leverage. When you look at this here, this isn't necessarily telling you that there are increased short positions coming onto the market here, but what this is showing you is that there is a giant wave of de-risking and deleveraging that has been happening towards the end of the first quarter of 2025. We have witnessed a greater and more aggressive deleveraging event than we saw back in the 2020 pandemic there. Just to put that into perspective, and in all of those significant drawdowns that we saw in 2022. So just putting that into perspective for everybody, there is a giant flight to safety happening right now. And again, when we take a look at bond yields today, we did see a significant move down in the 10-year treasury yield. It is getting kind of, let's say, sold back off a little bit. Those bonds are getting sold off a little bit at this current time here, but a lot of this has to do with growth expectations. When we come over here, we've talked about this chart a lot. That first quarter GDP growth from the Atlanta Fed, those expectations have been falling through the floor, sitting at around negative 2.8% now. And just yesterday, we got some more notices from Goldman Sachs. Higher tariffs are likely to boost consumer prices, and we have lifted our year-end 2025 core PCE inflation forecast by basically half a percentage point there to 3.5% year on year, reflecting both the tariff news and a decline in our Q1 GDP tracking estimate to just 0.2%. We have also lowered our 2025 GDP growth forecast by about half a percentage point there to 1%, and on a Q4 to Q4 basis, And because of the GDP growth downgrade, we have raised our year-end 2025 unemployment rate forecast to 4.5%. So what Goldman Sachs is guiding towards here is they are leaning a little bit more towards that stagflation narrative. We now see a 12-month recession probability of 35%. The upgrade from our previous 20% estimate reflects our lower growth baseline, the sharp recent deterioration in household and business confidence, which we've talked about countless times on this channel here, and statements from White House officials indicating greater willingness to tolerate near-term economic weakness in pursuit of their policies. Now, before we get into this one very specific asset that Tom Lee is incredibly bullish on and has a very aggressive price target for the end of 2025, I want to put some of this short-term tariff talk into perspective for everybody, just kind of outline some of the risks and some of the economic effects that could end up playing out and what people really should be focusing in on here, because the tariffs in and of themselves aren't necessarily the most important part, because they are part of a broader economic plan that this new administration is trying to enact. So really, when you think about kind of President Trump and the way that they are going about this new tariff situation, in either outcome, they are going to view the results of these tariffs and these tariff talks as a win. Here's why. Well, if they are going to use that bargaining chip narrative and say that they're going to slap tariffs on a lot of these other countries and say, well, if you give us what we want, we are not going to then put these tariffs on you, well, then they can view that as a win. On the other side, they do want to generate more revenue for the United States government, and these new auto tariffs are set to generate about $100 billion per year in additional revenue for the United States government. And the total now from a lot of these tariffs is about $600 billion. Now, for them, that's a win. Now, it can easily cause in pockets of the economy some short-term price increases depending on how long-lasting these tariffs actually are, and if people end up coming to the table to negotiate eventually. The problem is what happens next. What we've heard time and time again, and we heard it from Lutnick, that they are looking to do some pretty aggressive and sweeping tax cuts. Now, one of the issues with thinking about tax cuts in this kind of context here, especially when you have a president saying things like he couldn't care less if foreign automakers raise prices due to tariffs. Again, it's not just going to be those foreign automakers. Again, a significant portion of the parts that are used to make American-made cars do come from international sources. So American cars are probably going to get more expensive as well there. But if there are going to be pockets of price increases due to these tariffs, which again, we haven't quite seen just yet, we are still waiting to see if that is actually going to happen. Well, if you're going to use any new revenue from these tariffs in order to justify tax decreases, Well, you already have about 50 million Americans that don't make enough money anyway to pay federal income taxes. So prices are going to go up on those individuals, but they're not necessarily going to have an additional amount of money due to the tax savings that they would have had if they were making more money to actually go out and spend in the economy and make the effects of those price increases not feel as bad. So you actually have to figure out a way to then also really bring a lot of these manufacturing jobs back to the United States and provide more jobs in the economy as a whole. And that's really where I want everybody to start focusing in on, because again, the tariffs in and of themselves aren't necessarily the important part. It's the execution of the broader plan that this administration is trying to enact and really determining, okay, based on the next couple of months, are these plans that they have and what they've outlined, is it actually likely to happen? And is it going to have a positive or negative effect on the economy and the everyday consumer? Because as you've seen right now, the consumer has pretty much zero confidence in this current economy right now. So there's a lot of moving parts here, guys, and that is driving the overall uncertainty that we are currently seeing in markets. What Tom Lee has said is he thinks investors are going to be put a little bit more at ease after this week, but it really depends on kind of that next wave coming in kind of the news cycle and really in a lot of this economic data based on what happens this week with these new tariffs. Now, let's get into this second Tom Lee clip here from this same interview, talk about this one asset that has, in his opinion, the potential to almost double from where it is currently trading at. But let's hear it from Tom Lee himself.
Bitcoin's testing recent near-term lows, I guess, again. It's been under 80. It's not quite there yet. It definitely is a risk-off trade, and when the NASDAQ goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so.
You do at 80.
Yeah, I think part of this was Bitcoin seasonally was just not going to be attractive until after March ends, and now we're finally exiting March, and so I think not only is the calendar looking better, but as you're saying, the Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year.
Right. People love it when I ask you what your year-end target is on Bitcoin.
Yeah,
it makes people very excited.
Yes, and I mean,
one crazy high again.
I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
Do you agree with what Larry Fink said just about the idea that...
So as you guys heard there, Tom Lee still remains incredibly bullish on Bitcoin going into the end of this year. And with Bitcoin trading around 83,000, again, that provides a little less than 100% upside than where we are currently trading right now. And when we come over here, take a look at that chart that everybody's been talking about a lot, Bitcoin versus the global M2 money supply index. We are right at that point where we could start to see Bitcoin moving to the upside. But again, I want to make sure that you guys are kind of hearing me here and saying, okay, relax. We could end up seeing this aggressive move up in crypto, but it is all going to depend on what happens with the broad market. And you really need investors to see certain signs that we are heading in the right direction with the economy in order to be comfortable going back into some of these risk assets here. So again, if you guys are interested in Bitcoin, looking at this chart and looking at where we are in the markets right now, it may not be the worst idea in the world to buy, but again, we still have a lot of this uncertainty in the market, and we are gonna have a lot better of a picture going into the end of this week, or really by the end of this week, beginning of next week, after we hear a lot of these comments from FOMC speakers. We get new pieces of data there, especially with non-farm payrolls, and we really kind of finalize this April 2nd, April 3rd kind of deadline with these new tariffs. So guys, that is going to wrap it up for this one. If you guys did enjoy the information and analysis I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed and turn on notifications so you're notified every single time these videos are posted live. But until next time, guys, I will see you. Peace.